If you're a senior or retiree living in the United States, whether you're a U.S. citizen, a green card holder, or someone who has recently retired and is dealing with U.S. taxes more seriously for the first time, there is an important IRS update you need to understand right now. The IRS has tightened the way certain taxpayers must report retirement-related income and foreign financial accounts and assets. On the surface, this sounds like just tax stuff. But if you are an immigrant, a lawful permanent resident, adjusting status, or planning to apply for U.S. citizenship, this can quietly become an immigration issue as well. Tax filing history, consistency, and honesty are part of the overall picture immigration officers can look at. In this video, I'm going to walk you through what has changed, who is most affected, what you should check immediately, and what the safest next steps are so you stay compliant and avoid unnecessary stress. My name is James, and for the past several years, I've been working in the U.S. immigration space, helping thousands of individuals and families understand how U.S. systems actually work in real life. Today on Immigration Newsroom, I want to help you understand how this IRS filing update could impact you or a loved one. Let's start with the big picture before we get into the details. The IRS is the federal agency that administers and enforces U.S. tax law. Every year, many people file an income tax return to report their income, deductions, and credits. But how you file, your filing status, which forms you attach, what you report, and what you leave out, can matter just as much as whether you filed at all. As a retiree or senior, your income picture often looks very different from when you were working full-time. Instead of a paycheck every 2 weeks, your income might come from Social Security, a pension from a former employer, distributions from an IRA or 401k, annuities, rental income, dividends, interest, or capital gains. If you have any financial connection to another country, maybe you worked abroad, maybe you were born abroad, maybe you still own property or keep savings there, the picture gets more complicated very quickly. Here is the core of the new emphasis. The IRS is increasing its focus on complete and accurate reporting of foreign-held accounts, assets, and certain kinds of retirement income. In plain language, they are expecting more people to file the extra forms that report foreign bank accounts, investment accounts, and some retirement arrangements. In many cases, people who never had to think about these forms before may now find they fall under the rules, either because the thresholds are being interpreted more strictly, or because the government is simply paying closer attention. This is not a brand new tax that suddenly makes you poorer overnight. It is more of a compliance push, combined with updated guidance about who needs to report and how. But if you are supposed to file these forms and you don't, even by accident, the IRS can assess penalties, interest, and additional scrutiny that are much harder to fix later than they are to prevent now. So, who should be paying the most attention? If you are a U.S. citizen or a lawful permanent resident, and any of the following sounds like you are exactly the kind of person who needs to take a closer look. You receive a pension from your home country or from a foreign employer. You have a bank account outside the United States, even if you rarely use it, and it's just sitting there. You maintain investment accounts abroad, brokerage accounts, mutual funds, or managed portfolios. You left savings in an overseas account for family reasons, such as helping parents, children, or siblings. You are a joint owner or signer on an account for convenience. For example, you are added to a parent's account so you can help them pay bills, even if you don't think of that money as truly yours. Two major reporting areas come up again and again for people in your situation. Understanding them at a basic level will help you have much better conversations with a tax professional. The first is the MOAF Birbois, the Foreign Bank Account Report, technically FinCEN Form 114. The rule many people don't fully understand is this. If the combined MOMA value of all your foreign financial accounts, checking, savings, investment, certain retirement accounts, exceeds $10,000 at any point during the calendar year, you may be required to file an FBAR. That $10,000 threshold is not per account. It is the total value across all foreign accounts at their highest point. If you had $4,000 in one account and $7,000 in another for even one day, your combined value would be $11,000 and you would likely need to file. The second is Form 8938, Statement of Specified Foreign Financial Assets. which is filed along with your annual tax return. The thresholds for Form 8938 are higher and depend on your filing status and whether you are considered to live in the U.S. or abroad for tax purposes. For many single filers living in the United States, the trigger can begin around $50,000 in foreign assets at the end of the year, or $75,000 at any time during the year. For married couples filing jointly, the thresholds are higher, and for certain people living abroad, there are separate numbers. The key idea is that it is surprisingly easy to cross those thresholds if you have multiple accounts, a foreign pension, or an investment portfolio overseas. On top of accounts, foreign pensions and non-U.S. retirement plans raise their own questions. Some countries have retirement vehicles that don't fit neatly into U.S. categories like 401k or IRA. Whether those are treated like taxable accounts, deferred accounts, or something else can depend on tax treaties and very specific details. That's one reason guessing is dangerous in this area. Two people with similar sounding pensions from different countries can be treated very differently under U.S. law. For many of you watching Immigration Newsroom, the obvious follow-up question is, can any of this affect immigration? Directly, the IRS is not the agency that grants or denies visas or citizenship. USCIS and the Department of State handle most immigration decisions. They don't sit there with a checklist of tax forms. But indirectly, your tax behavior and compliance can absolutely show up in immigration processes. For example, when you apply for naturalization, USCIS looks at your good moral character over a certain number of years. Part of that assessment can include whether you have filed required tax returns and whether you are meeting your tax obligations. If there are big gaps or obvious non-compliance, the officer may ask about it. They might want to see payment plans, amended returns, or proof that you've taken steps to fix problems. If you sponsor someone for a green card, say you are a U.S. citizen sponsoring a spouse, or a green card holder sponsoring a child, your recent tax transcripts are often part of the required evidence. The I-864 Affidavit of Support specifically asks for your tax information. If the income you claim on the form doesn't match what the IRS has on file, or if it looks like you haven't filed when you should have, that can lead to delays, requests for explanation, or even questions about whether the sponsor is being honest. In more serious cases, if someone is intentionally hiding income, opening accounts in other countries to avoid U.S. reporting, or failing to file tax returns while claiming benefits elsewhere, that kind of behavior can be used as evidence of fraud or lack of good moral character. Again, one honest mistake doesn't normally destroy an immigration case, but ignoring a problem year after year can create much bigger complications later, especially when you finally walk into a citizenship interview. So, what is the safest way to respond to these IRS changes? The first step is to gather information. Instead of trying to remember balances off the top of your head, pull together your bank statements, pension and retirement statements, investment account summaries, and any documents related to foreign accounts or foreign income. If your name appears on the account in any capacity, owner, co-owner, signer, that account may need to be included when you calculate thresholds. The second step is to look or have someone look at whether you might have foreign reporting obligations based on those balances. If you have any foreign accounts at all, it is worth asking specifically about the FBR rule. If you have higher balances or several types of accounts, your preparer should also consider Form 8938. If you receive foreign pension income, ask how that income should be reported and whether there are special treaty rules between the U.S. and the country paying the pension. The third step, if you feel uncertain, is to get professional help. This is one area where trying to save a small amount on tax prep can end up costing a lot if things are done incorrectly. Look for a CPA, enrolled agent, or tax attorney who explicitly mentions experience with international tax or cross-border reporting. Not every tax preparer deals with FBARs and Form 8938 regularly. You want someone who does this often enough that it's routine for them. At a basic level, it's helpful to know what the main forms do so they don't feel mysterious. The FBAR, FinCEN Form 114, is not filed with your regular tax return. It is submitted electronically through a Treasury Department system, usually due on April 15th with an automatic extension to October 15th. It asks for the maximum value of each foreign account during the year, along with the institution and account number. Form 8938, on the other hand, is attached to your income tax return and goes to the IRS. It lists your foreign financial assets, bank accounts, investment accounts, some pensions, certain interests in foreign companies or trusts, along with their maximum values. The thresholds for filing it are higher than the FBR, but some taxpayers are required to file both. If you do end up needing these forms, don't forget the fourth step. Keep your records. Save copies of the returns you file, the confirmation pages showing your FBR submission, and any correspondence from the IRS. If you're a green card holder or planning to apply for naturalization in the future, being able to quickly show a clean tax trail for the required number of years can make those processes less stressful. Instead of scrambling to find old paperwork, you'll have a folder, physical or digital, where everything is already organized. To make this more concrete, think about a retiree named Robert. He's 70 years old, has been a lawful permanent resident for a decade, and plans to apply for U.S. citizenship soon. Robert receives U.S. Social Security and a modest pension from the country where he worked most of his life. He also has an old investment account in that country that he rarely touches, but it still holds the equivalent of $40,000. Every year he files a U.S. tax return showing his Social Security and some U.S. bank interest, but he never mentions the foreign pension or investment account because he assumes foreign income doesn't matter if it stays overseas. Under the rules we're discussing, Robert may need to be reporting that foreign pension as income and including his foreign account balances on an F-bar and possibly Form 8938. He hasn't been doing that for years. If he waits until his citizenship interview to find out, he could be dealing with back filings, penalties, and anxiety at the worst possible time. If he takes action now, gathers his statements, consults a professional, and voluntarily corrects his filings where necessary, he can protect both his tax record and his immigration goals, and walk into his naturalization process with far more peace of mind. Now you might be thinking, what if I already missed something? What if I should have filed these forms years ago and didn't? This is where it's important not to panic, but also not to ignore the issue. Many immigrants and retirees only learn about FBRs and foreign asset reporting after they've been in the U.S. for a long time. The IRS knows that not every mistake is intentional. In some situations, people who honestly didn't know about the rules and who correct things voluntarily can qualify for reduced penalties or even penalty relief, especially for so-called non-willful violations. There are specific procedures and programs that a knowledgeable tax professional can explain. Which ones apply will depend on your facts. The key point is that you have more options and usually better outcomes when you come forward on your own than when the IRS discovers an issue first. Doing nothing and hoping it never comes up is usually the riskiest strategy, especially if you plan to maintain status, sponsor family members, or apply for citizenship in the future. Problems that are small and fixable now can grow into larger obstacles if left unattended for many years. Here at Chuck's Immigration Newsroom, the goal is to give you clear, practical explanations exactly in these areas where taxes, immigration, and everyday life intersect. I know this can all feel overwhelming. U.S. tax rules are complex even for people born here. Add in foreign income, multiple countries, and retirement accounts, and it's a lot. But remember, you don't have to become a tax expert overnight. You just need to know enough to recognize that an issue exists and then get the right help. If this explanation helped you understand what's going on with the IRS's renewed focus on foreign accounts and retirement income, consider sharing this video with a parent, friend, or community member who might be in the same situation. Many seniors, especially immigrants, have never been told about these requirements, and a simple conversation can save them real stress. Make sure you subscribe to my Immigration Newsroom and turn on notifications so you don't miss future updates about how law and policy changes might affect your status, your travel, or your path to citizenship. You are not alone in this. With some organization, a bit of support, and a willingness to address small problems before they become big ones, you can protect both your financial future and your immigration goals. My name is James. This is Immigration Newsroom, and I appreciate you spending this time with me. I'll see you in the next video.